the Fed decided to skip raising rates this meeting. That's the good news. The bad news is they say 2 more rate hikes at the minimum are coming later this year. Let's talk about that. Good afternoon, everybody. Don Miller here from MarketBeat. I have Thomas Hughes with us today. We're going to do a quick video on the Fed meeting today, what Jerome Powell had to say, how the market reacted initially, how it reacted later, and how it will react going forward. Thomas, welcome. Glad to have you back. How are you doing today?
I'm good, Don. Good to be back. How are you today?
Good, good, good. By the end of this video, I think most people will realize that I'm not a big fan of the Fed and or Jerome Powell, but I'm going to try and keep it on the level. Thomas, yesterday the CPI number came out and it was lower. The core number was actually higher. The media chose to ignore that and not promote that narrative at all. And then today, the Fed decided that they were going to, quote, pause the rate, skip the rate out of this meeting. At the same time, promised 2 more rate hikes, probably by the end of the year, which is kind of, to be honest with you, why I have a problem with the Fed. They never really say what they mean or mean what they say. But give us your take on what happened today and what you see going forward.
Well, this decision was kind of easy to spot. I mean, the PCE data last month accelerated. The CPI was hot again, like you say. So that points to the Fed needing to be hawkish. There was no reason to expect a cut because of that. The CME Fed Watch tool was also pricing in a pause this meeting, but then the possibility of 2 more hikes later this year. So this decision was pretty much in line with what a lot of the market was expecting.
Okay. That being said, what did you see the market do when the news dropped, and then subsequently when Mr. Powell had his press conference?
Well, it dropped immediately after the news because it is a little bit of a shock to some people, I guess, and it certainly alters the outlook. But it seems like the S&P is trying to stabilize. We've been climbing this wall of worry, so maybe that'll continue.
We spoke of that wall of worry in the last newsletter video that we did. I believe it was Friday. We'll leave a link in the description about that. But you've been saying all along that there wasn't going to be any rate cuts, any pauses for 2023. Tell me how you knew that.
Well, I don't know how I knew it so much, because I mean, for a long time, the CME Fed Watch tool was pricing in a cut for October or November, but just watching the data and seeing how the data was kind of advancing at a hotter pace than what the market was pricing in, I knew that was going to change. But immediately following this announcement, the odds have altered significantly. Now there's a high chance for a hike in July, another high chance for a hike in September. One of those hikes could be 50 basis points, and there's no chance of a cut this year. So the market really needs to get that under wraps, or like in its head, don't expect an interest rate cut this year. It's not going to happen unless there's a major change in inflation, possibly caused by a serious recession.
A reporter from the Wall Street Journal, and forgive me because I can't remember his name in the presser today, talked about why the Fed, or Jerome Powell in particular, thought it was a good idea to pause now and then say 2 more rates later, rather than ripping off the Band-Aid. You and I have spoken a lot about this over the past 2 years, about ripping off the Band-Aid and just starting to recover a lot sooner, rather than this kind of slow bleed that we're undergoing now. Do you still think that, or do you think that it's a good idea to kind of pause this month or this meeting and then 2 more later, or would you just rather do it now?
Man, that cat is so far out of the bag. I mean, they should have been quicker and more aggressive the whole time. They've been lagging behind the market. They've giving the market what it wants versus what it needs. In my opinion, they've pretty much allowed this to happen. Like even in this meeting, they're talking about how they have to raise rates 2 more times and inflation is not tamed, while also sounding optimistic and trying to support the markets. So it's like, what is your purpose? Are you trying to help us? I mean, because it's hard to tell what exactly their agenda is.
Mark, Thomas, clearly they're not going to listen to us and never have. But for the individual investor, for MarketBeat readers, for the viewers on this YouTube channel, what can we tell them about what to do? Obviously, we're not financial advisors. Let me run that in there. But what can investors expect for the rest of the year? Are we in a rally? Are we in a more of a flattening because we have been in a rally? Or are we headed for a decline? Or can you answer that question at all?
Well, so we're in a very uncertain time for the market. All right. It's hard to know what's going to happen because we don't know where inflation's going. We don't really know what the Fed's going to do. We don't know if there's going to be a recession, hard landing, soft landing. We know the times have changed. We're in a new normal. I think that we're inside a giant sector rotation, market rotation, sideways trending market trading range. But back to something that I said last week or the week before, the bubble that shall not be named was the biggest in history. I mean, it was monumental in size. The correction, again, was monumental in size. We're now in a bear market rally. It's going to be monumental in size. So climbing that wall of worry, the market could continue to go higher, but eventually it's going to slam into the ceiling. That ceiling is probably going to have an FOMC label on it, interest rates, the decline in demand and recession. I mean, I think that's where we're headed. I mean, that's where we're headed.
Thomas, I heard you say, we don't know, we don't know, we don't know, I think 3 times, maybe 4 times. And that's the problem. We don't know. We never get to know until after the fact. I want to thank you for coming on last minute here and giving us your insight into what's going on with interest rates and FOMC, and just thank you for being here. I invite everybody to take a look at what Thomas has written on MarketBeat, what he continues to write. He is our top economic observer and writer, and just encourage everyone to take a look at what he's doing. Thomas, thanks for being here, buddy.
No, thanks, Don. See you next time.
All right. Bye-bye.